Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just the continuous meandering of Bitcoin on the crypto charts, just until probably the CPI report, maybe the New York Fed 5-year inflation projection report on Tuesday, and the CPI will come out on Thursday. So this is going to be an interesting week. There could be a couple catalysts for a significant move in either direction, and certainly that volatility is where it should be in order to support a big move, assuming that there's something fundamentally that does move the market. So just for truth in advertising, just want to go over a couple of these concepts that I put forward back here on October 6th, which was a few days ago, just the end of last week, just to see how these things are playing out, whether or not I'm being straight with you guys or not. Here's Zilliqa. If Bitcoin pops up, if the dollar drops down, then probably Zilliqa is going to follow Bitcoin. ADA. So right there, you can just see what I'm saying for Zilliqa, that Zilliqa was at support and that it didn't really have a lot of energy on its own. It did have a good volatility setup for itself, and so whatever Bitcoin did, Zilliqa would probably do. Bitcoin did find a little bit of a ground, and so Zilliqa has now popped up to 32 cents. And where was it before that? It was around 30 cents, 30 cents. So kind of a neutral play, but still a nice pop up on Zilliqa when Bitcoin did find a little bit of energy. Let's just review another one, Kadena. $1.39, $1.40. Still a good price if we are going to have energy in this market. Okay, so here I was just saying that although we're at a dollar 42 and a half when I was making this video, I did think that it was going to come back down to a dollar 40, a dollar 39, and right now Kadena is a dollar 40. Okay, now let's go over to Qredo. That's why I suggest do not FOMO into pumps, guys. Like, if you're gonna buy, like buy on a retest or something like that. And so maybe it's gonna come back into this area down here where perhaps it catches support, and that would be like 24 cents-ish area. Okay, so I just said like maybe Qredo's going to come down to a 24 cents. It was a 26 cents. It had been nearly 30 cents before that when I said it's probably getting pretty toppy there. And right now, Qredo is 24 cents. Okay, guys, so it's spot on. Let's take a look at Cpool. Zone of Clearpool, and that's maybe the best deal you're ever going to have had on Clearpool. I don't know about that. Clearpool tends to have these big pop-ups and then like a chop back down, so I'm skeptical. I think we could make our way back down, but if this market stays bullish, then this is a support level where we've had a nice pop before, so we hold on to this level. We could have another pop again, guys, and that. Yeah, so here I'm just saying that Cpool has been extremely volatile lately. If Bitcoin does have a pop-up, you can probably expect that Cpool is going to have a pretty big move. However, if Bitcoin just goes sideways, or starts to being a little bit lackluster, then most likely Cpool was going to break down. Of course, Bitcoin's pretty much just gone sideways or lackluster, and so after that nice pop that Cpool did have on the charts, the reason why you don't FOMO into that thing is because it's going to come all the way down. Cpool was 14 cents there, and it failed to hold that support, and so of course I was suggesting that there's the possibility for it to come down, and currently Cpool is 1240. And I think I make that a little bit more explicit by the end of the video. Yeah, you can see the down arrow there. So guys, just wanted to double check with you on some of those things for truth in advertising. Not going to go over the rest of the altcoins just because ADA, CRV, and Flux have pretty much been flat. On the other hand, Bitcoin did have that pop-up to this kind of a resistance zone that I mentioned is our new big boss. And so yesterday in our truth in advertising section, I did, of course, show how I was forecasting that we would get a little bit of a rejection there and that we really would need to break out above this thing, above this white line if you wanted to see bullishness, and that we still are very much in danger on the Bitcoin chart underneath this one, and so I'm not really going to show a clip on that, but just wanted to keep it honest over here and to have some transparency. So guys, you can see that I was clearly suggesting some type of directions. They did end up working out. If I have a major flop, then I'll also confess to that. But so far, we've been doing pretty good over here at Alpha Commission. Let's go ahead and just take a look at the Bitcoin chart. Of course, if we do zoom out, you can see that we are underneath, these macro, pardon me, the blue macro resistance line over here, the one that's been spanning for the last 6 months. We did manage to break back below. And then let me go to a 4 hour so you can see in a little bit more detail. We did manage to break below our 1 year resistance zone. And then look, we've popped up almost precisely on top of it again. So let me turn off my momentum pools over here. And so look how we're just snaking around that 1 year. We're like really playing around with that. We're really playing around with all of the emotions of all of the traders in this market who have just been, so bloodied by this 1 year downtrend on the charts that anytime you get a little pop up on this yellow line, right? People get really excited and they start FOMOing, and then look, they just like dump it down below. You pop back up, people get really excited, they start FOMOing in, and look, they dump it back below, right? People get bearish, they pump it back up above this line, people get really excited, and are they going to dump it back down again? I don't know. This structure looks okay, but we are just kind of meandering to the downside. So sideways and down is the name of the game, as this 6 month long resistance zone, which I did suggest multiple episodes now for probably almost 2 weeks, that this resistance line was going to be our most serious boss. And you can see my second boss episode to show where I actually projected that ahead of time and why I suggested to take some profit at this line, because we hadn't broken out of this resistance, and how this resistance has now taken over for that long-term downtrend. And guys, look, we're just like moving through this line, this yellow line, as if it's nothing, right? We're just moving above it, moving below it, moving above it, moving below it. And yes, we're walking around it, so it is an area of interest. This kind of zone is an area of interest, but we're just cutting through it like left and right. Like it doesn't matter anymore, okay? Like this yellow line isn't significant. This is our new big boss, the blue line. And if you guys haven't realized that, I mean, what do I got to do? Poke you in the forehead and knock some sense in you? Guys, like this is our new big boss. And so defeating this boss, this blue zone, is our new goal. And it doesn't matter whether or not we're above that long-term downtrend, because the momentum has actually shifted on Bitcoin, and we can kind of see that in if I go to perhaps let's go to the monthly on Bitcoin, and you can see that we are starting to have a little bit of a softer MACD this month. There's other ways to show this. Of course, that could change with any type of a volatile move, but as it is right now on the charts, of course, we are having some softening, that slightly curvingness, that slight curve on the bottom of the chart, whereas previously we were just dropping to heck. And so, guys, that does suggest that we would have a change in our macro downtrend, because of course you can't change your momentum at the bottom without also changing the momentum at the top here. And so yes, guys, this is our new big boss. We have successfully moved on from this one, and we will be contending with this next. So what does that mean? That means that the real level that we have to get above, just based upon this zone, is 20,350-ish right now. If we just go straight up, of course, that price does come down as time goes by, because this is a diagonal. And so we really are talking about just holding pretty much that $20,300 level if you want to see a real breakout for our true boss that we're contending with right now, which is limiting us from some bullishness. And we have to be very mindful that we can get just absolutely slapped down in this zone as we have been, just rejected, 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 rejected. And are we going to get rejected again? That's the big question. As Tuesday approaches with that New York Fed 5-year inflation data, as Thursday approaches with that, that big CPI data, which could just knock us on our butts depending on what's going on in the markets, or which could give us some reprieve. And then, of course, the final event is going to be November 2nd, um, that Fed meeting right before the national elections in the United States, which would be whether or not Jerome Powell is going to increase interest rates by 50 basis points, 75 basis points, or 100 basis points, 50 basis points, just to be nice to the election, to kind of be calm for politics season. 50 basis points, if Powell decides not to disturb the election, would probably send stocks skyrocketing upward. 100 basis points would be, and actually 50 basis points might also disrupt the election in having a big pump on the chart, now that I think about it. And so that does make 50 basis points just as unlikely as, the 100 basis points, which some people are calling for if the CPI data is bad, and considering that some of this economic data has been pretty bad. And so probably Powell won't do 100 basis points, probably he won't do 50 basis points. 75 basis points is probably more neutral, although we will likely take a little bit of a tumble on the charts if we do get 75 basis points. A lot of people still believe in the possibility of a 50 basis points only increase, although this is diminishing over time. And let's just see if we can get a update on this. Probably the same as Friday, of course. So yeah, 20% still believe that we could do 50 basis points. So 50 basis points would give us a nice pump, and 75 basis points would probably just be rather neutral, and 100 basis points would knock us to hell. So let's see what happens, and of course, that data on Tuesday and on Thursday, especially, that CPI data is really going to be the catalyst for what could possibly come. And of course, the market can front run that. So if we're talking about timescales, well, let's just move forward. And where does this really get compressed here? Let's go ahead and draw some type of trend line at the bottom here, right? Just draw some trend line on this. And so you can see we have a bit of a wedge here, right? And where does that wedge end? Let's just pretend this is like a little wedge, little indecision wedge. Where does it end? Oh, look, right here, around October 13th. What day is the CPI data? Right? It's October 13th. And so Bitcoin's probably going to choose a direction on the 13th, or probably the day or two after that. And then that's just going to correspond very precisely with the CPI data release date. And so we will either be forced to break our uptrend or forced to break our downtrend, and the market will have a direction. And so, guys, if you're just sitting on your hands until Thursday, no big deal. But on a Thursday morning, you probably want to stay frosty. You probably want to just be ready for whatever the market might throw at you, because it could be a curveball one way or the other. No matter what you guys feel about it, the market will do its own thing on that day, just because of how strange the macro is these days. The technical analysis just might not work out the way that some people expect. Okay, just understand this is a fundamentals market right now. Guys, let's go ahead and jump over to the key levels to watch on Bitcoin. So, of course, I am trying out my new system here, which is the momentum pools. And so far, they're working really well in terms of predictive ability. You can see the last momentum pool that I had set out for us just yesterday, and look what we've done. We've just kept really right inside of that tight range of the 2 to 5 day projection, and the majority of the body of the action has been within that 1 day momentum pool. So if I go ahead and switch over to the daily, just so that we can see how did we actually close, and you can see that we closed yesterday at the bottom of my momentum pool. And I don't know if you guys see this or not. Remember, I don't know where we're going to open. I mean, I don't know where we're going to close, how we're going to move on any one day, but you can see that we held the bottom of my momentum pool precisely, right? And so that's significant. What does that mean? That means that we had another chance at some bullish type of action as long as we were above that 19,400-ish, right? And so look, what happened? We're getting a little bit of bullishness because we're inside of that positive momentum zone. Anything underneath it is like dying, drowning in the pool. But if you're above it, then you're just swimming in the pool. And if you're sitting on top of the pool, then you're just catching some sunlight. That's a very bullish, right, guys? And so, yeah, we're just swimming in the pool and we're coming up for some fresh air. If we make it up to this area, right, that would imply that we're actually being very healthy in terms of our price action. That's the beauty of these momentum zones that I'm marking out for you. And unfortunately, we weren't able to get fresh air. You can see that we actually had a wick up there. So you can consider that we did get a grasp of air, but we also had this wick down here, mostly from pushing up from the previous day. But the point is that we're just swimming around in the momentum pool. As you can see, the 2-day definitely captured the entire move, including today's. And so the 2 to 5 day projection was also spot on. Now, these ones have outlived their usefulness. That was just a 1-day projection. So let's go ahead and move forward to my current momentum pool. You can see it's tightened up just a little bit, right? And so we are just tightly swimming in that one. And if we can get above that 19,512-ish, let's go ahead and see what did I actually calculate it as. 19,510. If we can get above 19,510, then we'll be looking very bullish for the end of the day on Monday, okay? Because this is good for 24 hours. So we have to close there tomorrow afternoon. That's also the beauty of this momentum pool. You get some time to swim around in it, and you can just kind of go, back and forth, up and down. But as long as you're within the pool, you're pretty healthy. Again, you go under the pool, then you're not healthy. What's the bottom of the pool? 19,445. Of course, I also create a 2 to 5 day projection, and so my 2 to 5 day projection doesn't actually give us any more room at the bottom. So essentially, the bottom of our range is still that 19,445. We don't want to violate that on a closing basis tomorrow. Otherwise, it's just going to look not good. But this momentum pool does suggest that we could have a little bit more floating around. We don't like to see the 2 to 5 day projection on top of the 1-day projection. But in this case, it's all right. So it's just overlapping. Let's look over at the signals that I gave. Of course, the signals were bullish above 19,520. We weren't able to really secure that area, and so we're just kind of just swimming around basically. And also we didn't violate our bearish area either. You can see that was that 19,400-ish area, and we didn't lose that, so totally fine. Just swimming around, guys. Pardon me, I did have to update these for the next day. So right here, our new one corresponds, of course, like this. And you can see the prices on the side. And let's go ahead and get our bearish right here. And then let's see, where's my momentum lines? Let's see, I have continuation. Today. Oh, there we go. I was too zoomed in there. So our really big uh-oh is just going to be moving down here to approximately this 2-day. So we're just going to go ahead and correspond that with that. Really, I don't want to see us losing 18,800, right? So let's just go to 18,800 just for a nice round figure. And for some type of a bearish bias, we're going to be looking at 19,000. 443, right? And then for some bullish bias over 19,500. And if you want to be very bullish, then we're going to capture that 2 to 5 day box on top of it, and then we're going to be talking about 19,534. So those are the levels that if you meet by the closing of the end of the day tomorrow are going to give you a good indication about the health of a Bitcoin, potentially for its next move, right? So if you want to kind of like front run the next move, that's the whole point of these signals. Of course, this isn't financial advice. This is just the system that I'm using to help give me biases in my trades, since of course we can't really predict anything with 100%. And then of course game over at 18,800, but that's so far away that it's just not worth talking about right now. Let's go ahead and take a look very quickly at the daily Bitcoin volatility. You can see that we did have a volatility flip here. And the thing is that we were expanding bullishly to the upside in price action while volatility was expanding. And that actually flipped. And so we ended up having a volatility flip. And so now we have to wait to see how this thing is going to eventually expand. Is it going to expand while Bitcoin is going down, or is it going to expand while Bitcoin is going up? And our Stokes can give us a little bit of a heads up on that. But right now, the Stokes, if we zoom in, you can see that it's quite pointed to the downside, right? And so we did have a flip on the Stokes over here around this 70% mark. And while it could have continued to go up positive, and that could have given a volatility bias to the upside, we are now solidly to the downside. And so it just doesn't look great. Just doesn't look great for our expansion on volatility. Because most likely that Stokes is going to continue to play out to the downside because it is a daily, and so it should take several days to play out. And I guess the hope is that it can play out before the CPI data. So if that Stokes reaches the bottom or flips positive before Thursday, then the bias would be to the upside, in my opinion. But currently, the volatility bias is to the downside. Let's just go ahead and take a look to see if any of these time zones are reset. Oh, look at this. The 4 hour has reset. So the 4 hour will be taking up a position pretty soon. The 4 hour tends to act much faster than the daily. So if we just take a look at our current price action, it's looking fairly solid here. Let's take a look at our Stokes on the 4 hour. It is pointed to the upside as long as we maintain a price above 19,300 on the 4 hour there. And so potentially we have something to pop us up, perhaps to recapture this naked candle. And so if you see this video early enough, you might get some type of positive indication. It's no guarantee, but there is just a likelihood, a statistical likelihood in that favor for that short time frame. Of course, the daily I did mention currently has a bias to the downside, and that can play over several days. It can take a time for it to play out. But for the 4 hour, it does look like perhaps we have a little bit of bullishness there. And that does go along with our momentum zones where, we are fairly reasonably holding on to it. And so if we played again in this blue area, that wouldn't be too big of a deal. We would probably still get rejected in this area if we are bearish, but that doesn't mean that we can't swim around this zone of rejection. You can see we swam around it here, swam around it here, right? Swam around it here, swam around it here. Just we don't hang out in a rejection zone for too long. But look, we kind of popped out of it, kind of cooled down, and then we could try again, is my point. You see what I'm saying? And then by the time the CPI data comes out, maybe it'll have energy to break through it. Or if the CPI data is just terrible, maybe we'll break down. So there you go, guys. That's Bitcoin for you. We did volatility, momentum, price action. And let's just go ahead and take a look at our EMAs really quick because I do like to look at those four things. Those are the four ways that I trade. Let's go ahead and go over to the daily. Let's turn off our drawings so we don't get too confused. And you can see that Bitcoin is really trying to get back into that squeeze that it lost. It would have to get above Yeah, I mean, the minimum threshold, as I kind of mentioned, is 19,530 by our EMA theory, guys. So the momentum zone is suggesting 19,530 would be very bullish. And so the momentum is suggesting that it could actually pop up if we do hit that 19,530. But the EMAs themselves say that's kind of like a minimum, and they really would like us to see 19,575 getting above that 9 on the daily. So we'll see which one wins out. Unfortunately, I do see that the 20 simple moving average is supporting us here, which does suggest that we could have the possibility of a squeeze to the downside because we have the 9 simple moving average above us, and so that one's actually in a squeeze play to the downside, and our EMAs just don't have any squeeze play to the upside, even though this is upward postured right now, and so this is a very risky moment. So I don't know. I think I'm going to bias myself towards the momentum analysis, but there's your EMAs in a nutshell. If we look at the weekly, of course, the weekly just looks extremely bearish. We're struggling to get ahead of that 4 EMA on the weekly, which is right there at 19,500. Again, going along with our momentum zone on the daily, which would suggest 19,500 is the minimum that we need to do in order to have a bullish bias. And so again, like these EMAs are confirming our momentum zones. Let's just go back down to the 4-hour to take a look at how our EMA structures are. And you can see that, yes, we are in a little bit of a positive squeeze play on the 4-hour with the 4 EMA and the 9 EMA. Now, that is not a strong formation. Really, we want to see ourselves, yep, at the 19,500. 19,500 is probably going to give us the energy to pop up to 19,600 and check that out. So for a possible squeeze to the upside, this is a little bit of a softer setup than what I would like, and so we can see that there is going to be a little bit of a struggle here. But if we can get up to that, the mid 19,500s, somewhere inside of there, then we do have a good chance of perhaps reclaiming this candle. Just a little bit of a battle right now. Let's go ahead and jump over to Ethereum. Well, actually, before I do that, let's check out CME because CME has reopened, being Sunday night. And let's just go ahead and take a look at our drawings here. So for CME, you can see it's a very similar situation. These are the professional exchange for Bitcoin. For CME, you can see it's a very similar situation as the Bitcoin 24/7 exchange, which is that we basically came up to this 6 months resistance, and then we got smacked down, and we are just hovering in between that long-term macro resistance and this 6 months macro resistance, which I now believe is our true boss, right, that we have to defeat. Let me just adjust this a little bit. Well, maybe that's because I'm on the 4-hour. Yeah, the 4-hour just has a little bit weird alignment. I don't know why it disagrees with the daily in terms of the level that we can hit. So I'm just going to add another line there just to have some backup when we're on the 4-hour. But yeah, so in order to break out of that zone, it does look like we would have to break above 20,385 if we just went straight vertical. Of course, that would come down a little bit, probably more towards this weekly 9 EMA, which is around 20,200 if we go sideways. So For the CME, very similar setup, of course, to the 24/7 exchanges. CME really doesn't want us to lose 18,900. It wants us to be minimally bullish above 19,500, and then, of course, that 20,200, 20,300. In order to, well, we can also see in order to break that 200 EMA on the 4 hour. And so, if you're looking for some type of logic here based upon EMAs, then you do see that 200 EMA, and you guys know how important that is. So getting on top of that would look pretty nice. Guys, let's jump over to Ethereum for real now, and let's go ahead and just take a look at the momentum boxes that I made here for Ethereum. Of course, this was our stretch goal up here. I'm just going to remove that because we are getting towards the end of that formation, so we weren't allowed to go forward. This rising wedge did play out instead, and usually there's a little bit more price action in a rising wedge than this, but we did just break out of it, and that went more along with a Bitcoin's formation, and probably honestly the stock market and some type of fundamentals in the professional exchanges and the traditional markets rather than just Ethereum itself. But Ethereum had been looking a little bit soft, and so maybe this stretch goal just wasn't possible for it right now. So let's just remove that. And it did, however, hit my target of this red box very precisely while we moved up to this on this rising wedge. So, good on Ethereum for that, but I'm going to remove that now. We don't need it anymore. Let's just go ahead and take a look at our momentum zones over here. Of course, this is this. I believe this is our new one. Man, I wish TradingView wouldn't move my boxes around. So let's just go ahead and take a look at how Ethereum is doing. Ethereum was losing its momentum over the weekend. Of course, the last one that I double checked it was on Friday, I believe. And so, it did hold its momentum box. Probably its momentum box moved down. It probably held on that, and it's just swimming around to that. You can see it's in the 2 to 5 day projection from last Friday. And so Ethereum just doing what it needs to do just to hang on and survive. These ones have outlived their usefulness. So let's go ahead and take a look at the current momentum zones for Ethereum. And so these are my updates for today. These are good for the next 24 hours. And you can see that the dark blue one, of course, is our daily. The light blue is our 2 to 5 day projection. And so you can see that already Ethereum is starting by default on top of its momentum zone today. And so it has a very good chance of holding its momentum, and its bullishness is already exceeding the 2 to 5 day projection. So this has been a squeeze, and I guess this happened in the last 4 hours. So, pretty nice move of almost, well, yeah, of 1% there on Ethereum, and just really securing its momentum on the 4 hour, pardon me, on the daily there. So based upon the 4 hour EMAs, it does have a bit of a squeeze play. So this does suggest continued bullishness on Ethereum. Let's go ahead and look at the daily for Ethereum. Of course, those momentum zones, those momentum pools, they don't change based upon the time. That's always going to be a 1 day configuration for me, good for 24 hours only. But you can see that on a squeeze basis for the price action using our EMAs, that also in line with our momentum zone being bullish, you can see that we do have a little bit of a bullish orientation here for Ethereum to potentially pop up to this 1360 area, assuming that it wants to tag the 21 on the daily from this point here. It could very easily lose this area though, guys, so just to be aware that this is just one candle. It's just one 4 hour candle that probably hasn't even closed yet. Yeah, I mean, it has 2.5 hours to go, so this thing is just pumping as we speak, but it got a little bit of resistance. So there may be another 4 hour candle that's needed to just kind of prove that bullishness. But you can see that Ethereum is trying to recapture this squeeze between this 21 yellow and this 9 red, right? And so the 9 and the 21 will really give that chance for a nice squeeze on the daily. But as long as this yellow is pointed to the downside, it's just not that easy for it to move. So we're going to wait to see, can this thing put a couple candles in between the red and the yellow line on the daily? And if so, then that'll give, the best chance for Ethereum. As for its momentum setup, you can see that we have captured the 2-day Stokes. We do have our MACD. We do not have our daily Stokes yet, which is interesting. It's interesting that there is a little bit of divergence between the daily Stoke. And let me just double check that. Yeah, I mean, our daily Stoke is actually, if I just zoom in here, it's actually turned to the downside. You can see that cross. And so our daily Stoke is turned to the downside and pretty prematurely, I'd say. Usually I would expect that around the 70 point. Of course, we can get these little turnarounds in between. And so this could be a bit of a fake out, sort of like this one, and then it just like dips down temporarily, pops back up, dips down, comes back up to this 70 to a 90 zone, where I really do expect the majority of turnarounds to happen. So again, for Ethereum, just doing a little bit of sideways action, probably as they wait for this 9 EMA and this 21 EMA to get closer together to perhaps initiate a squeeze either to the upside or to the downside. And that would be in line with what Bitcoin is doing with its structure, guys. Let's go ahead and just take a look at what would be the price level to capture that. It's a 1350. So yeah, I mean, on the 4-hour, what was I suggesting was the number that we could get to? Maybe 1340. And then on the daily, what's the number that we have to get our daily Stokes? 1350. And so, yeah, we definitely want to be looking towards that 1350 area. So for Ethereum, I'm just going to say super bullish if we get 1350 or above. In this case, I'm going to override my momentum boxes. And however, for bullishness, I would want to see us above 1330 on a closing basis. I think everything in between is just kind of just kind of like chilling out. So I'm not going to be bearish unless we're 1315 or below. So if we get below 1315, then I'm going to be biased bearishly. And that is where our 2-day Stokes is. But our MACD continuation doesn't break until 1295. So 1300, I'm going to be very bearish. Okay, so there you go. 1300, very bearish. 1315, underneath that, I would be feeling a little bit worried. Above 1315 to 1330, just feeling quite decent, quite reasonable about this. But really, I want to see us above 1350 for that kind of bullishness on Ethereum. There you go. Those are your levels for Ethereum. Guys, looking at Ethereum futures contract. Yeah, I mean, we're above our basic momentum zones for the professional exchange on Ethereum, but our EMA setup looks just disgusting on the daily. That looks like a squeeze to the downside, to be honest. We'll have to see how that goes. And then our EMAs on the 4-hour just look horrible, attempting to reclaim something, so we'll see. And of course, on the weekly, they just look god awful, right? But again, we are holding on to our daily momentum zone for the professional exchange on Ethereum, so there is a good chance that we can recover from that. Let's go ahead and go over to our risk factors. Let's start with the VIX here. As you can see, we closed pumping pretty well. You can see this wick where we just pumped up, and this is a pretty bullish configuration. The momentum is slowing a little bit, so maybe this does come back eventually, but right now it just looks very bullish, and so that's not good for trading. Let's go ahead and take a look at the dollar. And the dollar, it is open right now, and I did suggest that path for us to go forward to potentially 118, 120. And you can see that we're having the pullback that I kind of projected here. This turnaround happened a little bit earlier than I thought. And so let's go ahead and just move that over there. There you go. And so this is my projection that we would top out somewhere in the middle up here, and then we would have a pullback to this yellow line. As long as we don't violate this yellow line significantly, or at least this pink line, then I suggest that we could have a bounce that could come up here that could create a head and shoulders that just pumps us to 118, 120. A lot of people thought that the dollar was totally topped out and that this market was just going to turn around when we had that breakout on Bitcoin. But I mentioned it was kind of a fool's rally because you cannot expect the dollar to just turn around like that. There is a good chance that this thing continues to the upside if the Federal Reserve continues to have its bearish policies of trying to slow down the economy. Guys, of course, I'm going to end it there. Don't want to spend too much time. Zilliqa just acting bullishly. The last time we talked about Zilliqa, I mentioned it was looking fairly bullish. You can see on the 4-hour, it did have that nice little double bottom there at support. That was the point to buy in right at that double bottom. When you saw that bounce there at support and everything else was looking pretty good, then of course the target would be up here at the 35 cents, just kind of meandering around, could have a pullback before popping up. You can see these EMAs are quite dramatically to the downside, and so it just has a little bit of work in order to squeeze up. It's also facing its 200 EMA on the 4-hour, and that tends to be a nice place of resistance. Rejected, rejected. Could it get rejected again? Maybe, but this thing's holding pretty well, so I'm not going to knock Zilliqa too much. You can see a similar thing happened over here. It's kind of rejected from that 200, rejected, kind of rejected, and then finally it got like a nice move. And so again, it could just be chopping through this stuff. KDA, again, it was kind of losing that support that I wanted to hold on to. I really want to see it hold on to 148, 149, but it's getting rejected down here. It is having a nice curve to it, is making higher lows, but it's also making severely lower highs. So can it do it? I don't know. It's looking better than it was looking before, so I'm just going to say it's going to depend upon Bitcoin, right? Whereas Zilliqa has a little bit more of its own kind of thing going on, and you can see this low is actually higher than this low over here. In terms of Cadena, this low is lower than this one over here, and it's also lower than this one, and it's also lower than this one. So Cadena just has a really massive downtrend, whereas Zilliqa at least has a really nice double bottom or even higher low. You see that? That's a significant difference, guys. I hope that fact isn't lost upon you. And then also, we almost had a new higher high here, guys. Okay, you see this kind of like high right here. I mean, this is kind of, I'm a little reluctant to call this a high because of, but you see this structure, right? This is really big structure. So this low, and then it came up here to a high, and then, it almost did it. So like it's Zilliqa is holding on. Cadena by contrast, it did not have anything near this high over here. Okay, so again, it's just continuing to slop over, and it's really crucial that it holds on to this level because otherwise you could be talking about $1.10, right? Qredo did have that pullback that we were talking about, and it could pull back even more. Okay, I would expect that as it came down, this was a beautiful cross of my different zones here. Look at this. I did project that it would do this. It could drop down, bounce up, and then perhaps come back down. It's just that it did it in a very tight range, right? And so, look, it's even popping back up pretty much to where I was mentioning that it would pop up to. But let's go ahead and put this on log because it's so parabolic to the downside that you can't really see it well unless it's on log. And you can see the levels that we're playing with here. If we do bounce up, which we pretty much have, we could be talking about 27. I would probably expect that we're going to get rejected there and come back down to 20 no matter what, and 2021 no matter what, and then maybe make another go for it, or just slopping down. And if we lose 19, then potentially this lower level is on the table, but we'll see because we also have this diagonal trend that, I mean, we only have two 2 points really to really say that, and we could have set it here also. We could have set it here also. So this thing can always go lower. That's the problem with these type of downtrends. You can always go lower. And so just watching this to see how does it use this level as support, if it's going to use it as support. Cpool looking much better than Qredo, but at the same time, just chopping its way back down, meeting a little bit of resistance on the 4-hour 89. So it did get a nice bounce off of the 200 and the 800 on the, look at this 800. It's this little purple line right here. Just a beautiful bounce off of that 800. As long as it's above the 800 here on the 4-hour, there is a good chance that it can hold that level. I'm not going to read too much into this right now. Just going to give this one a little time to play out. Again, like it's more interesting if it can hold that 14 cents area. But below that, I don't know. It could just grind its way back down. So we'll just watch that space. Let's look at the daily. Yeah, the daily is squeezing to the downside, but the 21 is finding support. So I don't know. This could be just a bullish check back, guys, but we do have to watch that space. So just on pause. XRP again, like in that video that I showed you at the opening, like I had predicted that XRP would pump to 54. And did I show that one actually? Let's go to this one. So watch this space for XRP. Maybe it could pop back up to 52 cents if we don't lose, 47. So we were 48 cents when I made that video on October 6th, and then I was suggesting it could get to 52, maybe 54. You see my blue line right here with the arrow going up to it, really sloppy drawn arrow. And what are we doing right now? 52 to 54 cents. Boom! Guys, like we're just nailing these things. So again, like a proof in advertising, just a little bit of transparency there, okay? Like other guys, they don't really show you whether or not these things are working out for them. I'm trying to show you that, these plays have worked out using my own voice. And so, of course, sometimes they're not going to work out. But the key point is, do we get, better than 60% of the time? Well, since we always have stop losses for when we lose something, you know, uh, but whereas the sky is the limit on terms of earnings on when we get it right. So as long as you're like over 60%, then 60% with sky is the limit versus like 40% or whatever number of misses. Just if you're just even kind of like just weak, if you're just weak, having a bad week, and you're less than 60%, then hey, like that's not such a big deal because your stop loss is going to prevent you from having serious losses, right? But your upside is just tremendous if you can get it right. And so, guys, that's what we're trying to do just to increase our efficiency here. And for transparency, I'm going to show those things. If I do have just a major failure, I also will show that because, we could learn from that, try to figure out what we did wrong, right? But so far, Alpha Commission has been nailing it. Thank you guys for sticking by with me. Another long episode, but I did want to go over everything since we are coming into the start of a very potentially volatile week. You do see that all of the coins are trying to hold their basic support. All of the coins are trying to do their best to just kind of middle zone. And I do believe that the market is waiting for that CPI data on Thursday. However, they may get a little bit of a flavor of it based upon the New York Fed showing it's a 5-year inflation projection on Tuesday, although that could also be just a nothing burger on Tuesday because the main event really is that Thursday data. So guys, that was your alpha for the day. Stay safe and happy trading.